General Motors reported financial quarterly results that sent the stock price higher as the company makes its case for being the better electric vehicle stock to buy. I'm going to share with you the company's latest results, both in terms of financial results and growth in deliveries for electric vehicles, and update my buy recommendation for General Motors stock and let you know if I think the business is a buy, hold, or a sell. Coming into these quarterly results, I had the stock rated as a hold, and you're going to want to tune in to see if I'm changing that recommendation. So let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, let's start with the company's EV ambitions. So the company's growth in electric vehicles is outpacing the industry. In other words, it's gaining market share as it's releasing new models into the market. And you can see that trend here from Q1 2024, where it only had 6.5% US market share, increasing to 7.4% in Q2 and increasing to 8.2% in Q3 2024. Now, the vast majority of the growth in this is coming at the expense of Tesla, which is the industry leader in the United States for electric vehicles. But that's because it was the pioneer of the industry and it was first to market with many of its models. And now that competitors are adding new models to the marketplace, they are taking market share and Tesla is losing market share. And that trend is likely to continue for the foreseeable future. Now, if we look at General Motors' share of the US EV market, what I shared with you earlier was the US EV market overall and the growth of EVs as a percentage of sales overall. For GM, it's doing better than the industry. 9.8% market share for General Motors in the third quarter of 2024, up from 7.1% in the second quarter of 2024 and 6.5% in the first quarter of 2024. So GM increasing its share of the market, and the market is growing as well. So double benefits for GM here. Now, zooming out a little bit, you can see at just 8.2%, that means that 92 out of every 100 vehicles sold are not electric vehicles. So consumer demand for EVs is still growing slower than expected. And that's been the difficulty with the industry overall. And that's likely to persist until companies like GM produce lower priced models, increase the technology, and increase the convenience of these cars that take much longer to charge than a traditional internal combustion engine vehicle takes to fill up gas. GM expects to continue launching new models, and for the Cadillac brand specifically, it has 3 models expected to launch in 2025, the Escalade IQ, the Cadillac Optic, and the Cadillac Vistic, which all look really nice, and these are premium priced electric vehicles in 2025 that are coming out. For the lower priced market, the company is launching the Chevrolet Equinox EV in 2025, which is slated to be the most affordable EV in the United States with 315 miles of range and a price starting at $35,000, and that's before the $7,500 consumer tax credit. Now, this compares really well with the best-selling EV in the United States, which is the Tesla Model Y, which starts at over $40,000, and it hasn't been refreshed in many years. That model is a long in the tooth model, and when you're in the car industry, you'll know that freshness drives a lot of demand for vehicles. People don't need to buy as many cars as they actually buy, and they don't need to upgrade their cars as much as they actually do. Cars can last over 150,000 miles, but people generally trade in their cars way sooner than that. And the reason people trade in and upgrade their cars is because of something new that comes out that attracts their attention. That's been the difficulty with Tesla, is it hasn't launched something new, and the Cybertruck is not really driving that incremental demand that the company was hoping for. And companies like General Motors are coming in to fill that gap, that opening that was left from Tesla. And so GM making its case for becoming an interesting electric vehicle company to consider, especially as GM is trading at a forward price to earnings of just 5.4, just 5.4. And let me add Tesla to this comparison here so you can make your case for why GM is a lot more attractive. Tesla's trading at a forward price to earnings of 68. GM is just at, less than 1/10 of that valuation at 5.4. GM is gaining market share. Tesla is losing market share. And so it's a compelling argument if you're very bullish on the electric vehicle industry, which I am not, but I know many investors are bullish in the electric vehicle industry. General Motors is an interesting option to consider. Now, the company is making progress on battery pack cost improvements, which will help improve profit margins for its electric vehicles and will help it offer lower prices on existing models and newer models that it launches. And then if driverless car technology is your cup of tea, and that's one of the reasons why you're investing in Tesla stock, GM is arguably further ahead than Tesla in this category. It has 280 million miles driven with its cruise technology. The road network has expanded to 750,000 miles in North America. And 22 of its vehicles are currently in the market with Super Cruise, and they expect 380,000 vehicles enabled on the road by the end of 2024 and double that in 2025. And they expect to produce 15% of their vehicles with this technology in 2025. And they're already testing driverless cars on the roads. They have been testing driverless cars on the road. They had to pause, and now they're getting back into the markets, operating supervised autonomous driving in 3 markets and driverless testing in Houston. They accelerated monthly autonomous miles by 3x versus June. And they announced a partnership to deploy vehicles on the Uber platform during the first half of 2025. All of this is ahead of what Tesla is doing in driverless car technology. They're not even testing on the roads yet. They have 0 miles tested in driverless car technology on the roads. And so, again, I'll make that case again. If you're bullish on these categories, which I'm not bullish on driverless cars or electric vehicles, but if you are, then why not consider a stock that's trading at less than 1/10 of the valuation of Tesla if you're interested in this category? Even if you think Tesla is ahead of GM, is it more than 10 times ahead? I would argue not. All right. Looking at the company's key financial results, revenue jumped to $48.8 billion from $44.1 billion. Operating income jumped to $3.7 billion from $3 billion. And the net income margin fell from 6.9% to 6.3%, while net cash flow from operations improved from $6.6 billion to $6.9 billion. Now, one area that all American car companies are struggling with right now are sales in China, as the company's local car industry is really accelerating, driven by significant government incentives. China is one region where electric vehicles are growing as expected, robustly. Everywhere else in the world, they're not growing that well. And you can see here GM's global deliveries, 426,000 units in China sold compared to 542,000 in the same quarter last year. So a significant drop off in sales in the Chinese market. Overall, the company delivered 1.475 million units of cars sold. That was up from the previous quarter, but down from last year's total of 1.617 million, largely driven by the decline in China. So to update my recommendation of General Motors stock, you can see here on my stock recommendation list that the company was rated as a hold or a market perform. I last updated that on September 23rd. And while I acknowledge the company's performance was solid in the most recent quarter, I still would not want to be a buyer of this stock. I'll keep the stock rated as a hold, and I'll update that as of October 22nd. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.